Hi guys, it's Thomas here from COTBase.com. Welcome to a weekly COT review. Today we're going to be analyzing the 11th Commitments of Traders report of 2025, and as we always do, we shall start off by looking at the largest changes in commercials net positions. But before I jump to the review, just a brief reminder for anybody who is new to COT analysis. Here at COTBase.com, you'll find a lot of educational material. Not only do we have these in written format, but we have some very useful videos as well that can guide you through the analysis process. If you need further help, a one-on-one, we actually offer consultations as well. Okay, back to the review and starting off with the first market, the gasoline market, where we have a 24% change in commercials net positions. We're of course analyzing the classic COT report type, or as CFTC calls it, the legacy Commitments of Traders report, having the longest history of COT data, futures and options data combined. So the 24% change can be witnessed over here. It's definitely greater than average. It is a bullish change signal suggesting some strengthening in the next few days. Moving to a 5 years chart, you can see that with this recent change, we are getting very close, or even I'd say there, to the most bullish COT Extreme levels on this 5 years chart. You can see that commercials are pretty much between 100,000 contracts net short and close to the zero line, to be more specific, about 10,000 contracts net short level. That's the range in between they're shifting their positions. This is more of a bullish COT Extreme, suggesting in the medium to longer term we could see the gasoline market rise even further. Moving on to our next market, we have silver with a 19% change. The red color behind that value, of course, suggests this is a bearish COT change signal. So if you look at the chart over here and try to understand how big of a change in commercials net positions this was, if we look at this past 52-week time horizon, this represents a 19% change in commercials net position. This is a bearish COT change signal, suggesting that the rally that's been going on in silver for some time now could cool down early next week. We may see a bit of a decline coming in the first part of next week. These COT change signals, of course, we understand could affect the market for shorter period of time. Now, if you open a 5 years chart, you can see that traders are moving towards their bearish COT Extreme levels. This 5 years chart does show us that there is some further space left to reach greater extremes. And of course, all-time COT extremes, if that would be the case, can be present in the market for a long time. The largest bearish COT extreme happened in 2017. So that's been 8 years now. And you can see commercials actually reached over 120,000 contracts net short level. Currently, they are at around 70,000 contracts net short, 70,000 contracts net short. So there's definitely space for traders to reach even greater extremes. This just simply states that if silver were to continue its rally, we should not be surprised, and we can expect traders to increase their bearish extreme even further. Now, I'm going to stop here for a second and just show you that if you combine classic COT analysis with the iCOT Intraday Indicator analysis, this is a 4-hour candlestick chart on silver. These are the default setting. This is the updated version of the indicator. You can actually use the basic version just to see the signals themselves, and you will see that they are pretty accurate because they do come from the iCOT scores lines, which is underneath the chart over here. It's an indicator we spend many years researching to really mimic what a classic COT analysis does, which is really stress level analysis. I do find this being a very very successful way of analyzing markets. And of course, it is very successful in shorter time frames as well. Let's look at a 15-minute candlestick chart, and you can see all those little yellow dots underneath the candle. If it's a buy signal, above if it's a sell signal, that's coming from commercials, the red line. If we look at large speculators at an extreme, that's usually represented with the candle itself changing color. Of course, when there's a sudden rise in the market, the dynamics are there. We could see signal after signal after signal. This is why we developed the iCOT Intraday Indicator with AfterSignal. The AfterSignal portion would filter out many of these signals. You can read more about these indicators on our page if you'd like to understand how it works and how you can actually benefit from that way of analyzing markets. Moving on to the next market, it's going to be the Kansas City wheat, where we have a 17% change in commercials net position. You can see that the last report, we had a very decent size COT change signal. This COT change signal, the 17%, is not as large. It's a bit larger than average, I would say, suggesting that this rally can continue on the next few days. Moving to a 5-year chart, we can examine stress levels in this market, and it's an unquestionable bullish COT extreme, suggesting in the medium to long term higher prices coming for the Kansas City wheat. Moving on to large speculators COT extreme analysis, we've got the feeder cattle market on top of our list with an all-time COT extreme in large speculators net positions. Of course, what does that mean? That in the entire history of COT data on the feeder cattle market, we have never ever seen large speculators at that level. This is of course a bearish COT extreme, suggesting that we should eventually come to a top in this market, and we can expect the feeder cattle to come down. I should point out that all-time COT extreme in small speculators, who CFTC calls non-reportables, it's also an all-time COT extreme here in their net positions. Now, the green is just by the basic settings of the system. I should point out, when it comes to livestock markets, I find that a lot of traders are, commercial traders, I should point out, are categorized into the non-reportable simply because they are not hedging so actively. They're not reaching those reporting limits, which would categorize them into the commercials category. So you can see that in the case of livestock markets, lean hogs, feeder cattle, live cattle, the correlation is actually between commercials, net positions, and small speculators. So don't get confused. This is not a bullish signal from small speculators. You need to understand that it's just due to the fact of these commercial participants, not necessarily huge traders on the market. They don't reach those reporting limits when they do their hedging activity, so they're categorized into the non-reportables. It's just something I wanted to explain to you. The Japanese yen is our next market, where we have an all-time COT extreme, not only in large speculators positions, but also in commercials. I explained this the last time. What's unique about this signal is how close it comes after a bullish COT extreme. So we had an all-time bullish COT extreme not that long ago, which was effective, but it was not strong enough to really change the trend in the Japanese yen. And now we're witnessing this very strong bearish COT extreme, suggesting we can expect the Japanese yen to start coming down in the next couple of weeks ahead of us. And last but not least, we've got crude oil with a 333 report extreme. Basically, commercials and large speculators net zero. And you can, of course, look at this in many ways. I would advise looking at WTI crude oil as well. But generally speaking, this would be considered a bearish COT Extreme, which again is a little bit surprising as the market is coming down. But it is what it is. We had a bearish COT Extreme, similar level just around, just preceding this top. And now we have another bearish extreme. If we open the max chart, you can see that we're not that far away from an all-time bearish extreme. We actually have seen commercials come under the zero line, meaning net short in the Brent crude oil. So we'll see if that will be the case again. Quite interesting. If you would like to look at other markets or do a more in-depth COT analysis, of course, COTBase.com offers a lot of very useful tools for you. You can dig into the report. We offer individual market data sets. You can chart everything if you want to. You can actually download our data if you are a pro member. That's another feature we offer. And as I've shown with the silver market, we do offer our own iCOT Intraday Indicator, a unique way of analyzing markets as well. If you have any questions, feel free to comment underneath the video or send us an email to info@cotbase.com. Thank you very much for your attention. Have a wonderful weekend. Goodbye.